Welcome. If we get a stock which satisfy most of the conditions of Warren Buffett, how nice it will be. Are there such stocks in India? Yes, there are many stocks in India. Don't forget, even Mr. Warren Buffett has invested in few stocks in India. The 10 years history of that particular stock is one of the major criteria to understand the performance of a particular stock, which can correspond to the systems what Mr. Warren Buffett follows. Such stocks are available in India. Why not we discuss such a stock and get into more details, do more research, and shorter term basis, medium term basis, longer term basis, we can invest. Yes, shorter term basis, medium term basis, we can use technical charts, but using the charts on a fundamentally good stock can be a really dream come true. Let us try to understand few good features of this particular company, which started almost more than 75 years of history, and it's growing rapidly and also expanding rapidly in the next few years. Come, let me show you the company which is into surface protection coatings. This name of the company is Gror and Wheel India Limited. It's a listed company. Let me show you the management board. It is Mr. Umesh N. More. One of the criteria of Mr. Warren Buffett is owner operator. That is, who owns the company, they only run or control the management of the company. Such company is this Gror and Wheel India. So Mr. Umesh N. More, and he is a diploma in auto engineering. And let me go to another person in the same management group. This is Neeraj More, again related to this person. He has done BBA graduate. And then we have Yogesh Samad, is a director operations, he is MBA and CFA. And we have Mr. Rohit R. More, he is done B mechanical, and he is controlling business management and control. And there are non-executive independent directors. So non-executive independent directors are very important, which can ensure a better corporate governance following. And what are these verticals in which this particular company operates? One is chemicals, engineering, paints, lubricants, and real estate, though real estate is a very small portion of their business. And the industries in which they are operating, that is aerospace, auto and auto ancillaries, and we have jewelry, sanitary, electronics, and PCBs and fasteners. These are the industries in which this particular company is running. And let me show you the various product lines in this. One is the electroplating, where pre-treatments, functional coatings, decorative coatings, etc. are done. This in distinct surface finishes, where electroless paintings, electronics, precious metals, post-treatments, and conversion coatings are there in their list of products. And top coats, passivation, sealers, and electrophoretic lacquers. Specialty chemicals also are there in this particular company, zinc flake coatings and intermediates. And engineering products, they have automated plating, phosphating plants and painting plants, filtration system, and high performance coating. Definitely these will give better margins, and that is reflected in the ROE. We can see ROE is 19.6% and ROC is 26.1%. And this is a 4,000 crore market cap company, and its stock price currently is at 91, and 52-week low has been 72. And there is some dividend yield. That means the company is providing you some dividends every year. So 0.55% is the dividend yield what we can see here. And if we see and go further, we can see they are on an expansion mode. They have, companies building manufacturing capacities at Jammu, Boratiwala, and Dadra, and it has planned 176 crores of capex. See, having capex expansion plan talks about the allocations of the profits, so that further expansion can take place and the company get into growth mode. And if you could see, these expansions are funded from internal accruals. This is very important. That means the company is not going for any sort of debt, nor it is trying to do any offer for sale of their equity. They are doing exactly from only the internal accruals, and very low debt or almost debt free company. And it's got a certification, almost ISO AS 9100 certified company in Indian surface finishing solution. It is the only Indian company and one of the few global companies offering complete corrosion protection solutions. Very few companies. So this is one among them in the world. That is where we get some sort of a advantage, because the competition is less. That will be an added advantage for us, which is the most important aspects in terms of competitive advantage or moats, what Mr. Warren Buffett suggests. Now this is definitely 78 years. It started in 1957. Such an old company with a 4,000 crores market cap. And let me show you some performance figures here. We have seen about all this P ratio and dividend yield. You see the promoter holding, it has been consistent 69% from so many years. And this is one of the major factors also what Mr. Warren Buffett observes in Buffettology. The latest 5 year sales growth has been 12.2%, whereas the last 10 years sales growth on an annualized basis has been 10.9% CAGR. So the latest 5 years growth has accelerated better in terms of sales growth. Now 5 years profit growth has been 16.5%, 10-year profit growth has been 17.1% per annum, which is almost similar, and operating profit margin has been good at 17.9%. We have seen about return on equity and debt. If you see, the company has maintained healthy debt to equity and reduced debt. It's almost debt free company. And cash from operations in 2024 has been 159 crores. So this is almost debt free company and consistent growth and a strong promoter holding and a diversified business with high return on equity. I'll show you one of the interesting factor in this particular thing. When I take 10 years history or 15 years history of this particular company, if I see the P&L statement, if you see the EPS from March 2013 to March 2024, that's almost 11 years of performance. The EPS, please observe the EPS: 0.44, 0.67, 0.74, 0.93, 1.2, 1.4, 1.4, 1.67, 1.5 to 1.74, 2.49 and 3.23, and trailing 12 months has been 3.54%. If you see, in the last 11 years, just 2 years has been stable in the similar line, but every year the EPS has been growing. This is one of the major factor when we are looking at stocks which really correspond to the rules and regulations of Mr. Warren Buffett. This is very important. Consistency in the profitability, growth in the profitability year on year. Just 1 or 2 years is fine, and that too it has been same in that particular 1 or 2 years or slightly lower, but that is fine. And if you see the return on equity last 10 years, we are not taking 1 year's history, we are taking longer term history. Last 10 years on an annualized basis, the return on equity has been 17%, and profit growth from 17%, 16%, 30% in the last 3 years on an average basis, and trailing 12 months it has been 15% in this particular stock. So yes, this is definitely a good stock. We need to get into more details about this particular company. Do your research, consult your financial advisor, take an informed decision. And let me show you the chart, because the chart is very important, because when we take a chart, we need to find out any best level to buy, and margin of safety is also very important, because the P ratio is 25.7. Definitely if it is somewhere around 10 or 15, it can be good for us to invest, because the EPS is around 3.54. If we want 10 times the PE should to come down, it will be around 35 rupees. The stock has to come down below that so that my PE will be 15. So that is around 60 rupees or 55 rupees is the best level to buy. However, let us have a look at the chart. If you see, the 2018 high is 41. So 41.11 is best entry for us on a technical basis. By any chance there is a dip because of various volatility that take place, various announcements that come, macro micro issues, the stocks can react down. At that time we can get a better entry at 40 zones, because if you see, first time, second time, third time, this 40 has been a crucial level in the chart. It's a very simple method to understand this support, and then 40 is a good level as per P ratio. If you want to buy the stock at around P 15, we can get entry, we can look at an entry at 60. Or if we like the stock, after doing the research, after consulting your financial advisor, you can start investing in this as a SIP mode, or keep accumulating as it corrects, so that your average comes towards 40, so that the margin of safety also will be better. If you get below 40, nothing like it, but the performance need to be checked when the stock reacts, and make a decision to invest in such stocks. I am not a SEBI analyst. Please do your research. This is purely based on the study what I have done. I'm just sharing on an educational purpose, and I will be investing when this stock corrects, or I may plan to do SIP in this particular stock. Thank you.